Hi, I'm Pattu from FreeFinCal. Today, let's talk about the Nifty Large Cap 250 Index Fund. As of now, there are five fund houses that offer index fund tracking this index: Edelweiss, HDFC, ICICI Pru, Mirae Asset, and Zerodha. This is a very unique index fund in the sense that it contains 50% of Nifty 100 and 50% of Nifty Midcap 150. If you look at Nifty 500, all the 500 stocks are weighted as per their free float market capitalization, and therefore most of the Nifty 500, about 60%, will be large caps, and then about 20-25% mid caps, a little bit maybe less than that, and some small caps and so on. In this case, you have 50% of mid caps uh, rebalanced twice a year. So in that sense, the exposure to mid caps is higher. This means the risk will also be higher. There can be years when the mid cap segment and the small cap segment don't perform well compared to the large caps, and therefore during that time such a fund can be very frustrating to hold. So let's take a look at some data. This is the 10-year rolling returns of the Nifty Next 50 in yellow, the Nifty 50 in brown, and the Nifty Large Cap 250 in green. Now, if you look at this 10-year rolling returns, typically you can see that the in the past, the Nifty Large Cap 250 has a bit underperformed the Nifty Next 50. But recently, in the last few years, when the mid caps and the small caps zoomed up, and when the mid cap index for the first time ever started to outperform the Nifty Next 50, the large cap 250 index has proportionately, become better. But again, whatever the outperformance was has fallen down. So typically, I would say the Nifty Large Cap 250 is more or less similar to the Nifty Next 50 in risk and reward. So I have said many times about the Nifty Next 50 that it's a very frustrating index to hold. The same will be true for the large cap 250 as well. Now, if you look at this, this is Nifty Next 50 in yellow, Nifty 500 in brown, and the Nifty Large Cap 250 in green. And you can see now that the gap, at least recently in the recent years, the gap between the Nifty 500 and the large cap 250 has come down a bit, and the same is true also for the Nifty Next 50. I don't know how the future will be, but this is how it looks today. If we look at the risk, this is a rolling standard deviation data, or the rolling volatility data. The blue line is the Nifty Next 50. That's distinctly more volatile. The Nifty 500 is in brown, the Nifty 50 is in white, and the Nifty Large Cap 250 is in yellow. So the rest of the lines, the brown line, the white line, and the yellow line, they're all more or less together. So they have a reasonably comparable volatility, but Nifty Next 50 is much more volatile. And this is the drawdown comparison of the Nifty 500 and the Nifty Large Cap 250. So here you can, this is a fall from the peak. It tells you how much the index falls from the peak and how long it stays underwater. That is how long it stays below 0%. That is how long it stays. There's a peak, and then for how long the index data stays below that peak. That's what the drawdown tells you. And you can see that the orange is the Nifty 500 here, and the blue is the Nifty Large Cap 250. The Large Cap 250 is a little more riskier than the 500 index. This is a comparison of the Nifty Next 50. Now it is in brown, and the blue is again the large cap 250. The Nifty Next 50, you can see significantly at distinct times it has been has higher drawdown than the large cap 250 index. So this is more of a this bit of a neither here nor there kind of index. It's very hard to say do this or do that with this index. So this is what I will recommend. So the main problem I see is that it has got 250 stocks and about 50% weightage in mid caps. And I'm not sure how those kind of indices will perform when there is a severe market volatility, and when the buyers move away from the market for some time, how such indices will perform in terms of tracking error and so on. And also, if the mid caps are going to underperform for several years, it can then the index will be frustrating to hold. A lot of people say, I have the risk appetite, I will hold, and so on. But all that is talk without experience. So this is what I'll safely recommend. If you can conquer your fear of missing out, your FOMO, and you are happy with one index fund and only large cap exposure, then as I always say, stick to Nifty Next 50 and be happy with it. If you cannot conquer your FOMO and you want exposure from other segments, then there are several options to you. You can choose Nifty Next 50 if you want, and you must understand the risks. You can choose Nifty 500, but you must appreciate that you're not getting 500 stocks, but you are getting a large cap oriented index with some exposure to mid cap and small cap, like I discussed recently. Or you can choose the Nifty large cap 250 also. It is not a terrible choice. It can be used, but I'm not sure if it is okay if it is to choose as a one fund index. I'm not sure. It can be a little bit risky. So that's why I would prefer Nifty 500. If you want one fund index and if you want exposure from all segments, Nifty 500 is better. If you can conquer your FOMO and be happy with a large cap exposure, then Nifty 50 is okay. At the end of the day, what matters is not whether you choose Nifty 50 or Nifty 500, but what matters is how much you are investing, how disciplined you are in investing, and how disciplined you are in increasing that investment. If you do that, then I don't think returns here bit 1 or 2% here and there matters too much in the long run. So what matters is your conviction and your discipline more than the index itself.